because the SEC hasn't ruled on it yet, and Larry Fink doesn't like it, and he's our biggest money manager, and all those other reasons, but they would allocate 50 to 100 basis points. Now, when you're running a $1 trillion mandate or an $800 billion mandate, which is some of the size of these funds, that's a ton of money. And that's a huge amount of demand that would come into the market. And as Bitcoin prices went past that 1% allocation, let's say, they'd sell it back down to 1%. But just importantly, if it dropped below 1%, they'd buy it back up. So there'd be an eternal bid forever. The volatility would drop dramatically. There'd be price appreciation in Bitcoin. It would be good for everybody involved in crypto. But we can't do it without policy. And so everybody should just get off this let's be rogue, let's be crypto cowboys. Forget all that crap. It's time to get this real and get a tremendous amount of capital going into crypto because it's policy and it gets regulated and it's good for everybody. Are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me, and I think regulators are starting to figure that out. Now, as an investor, I don't know which of these chains is going to win. Is Solana going to beat Polygon? Should I be in Pollen? What about, all of the others? Ethereum, of course, the big one right now, but too slow for many financial services. What's going on with, Helium and all of these different ideas out there? So my strategy is to do the same thing I do with stocks. Get diversification. I own 32 positions, 32 chain projects, 32 different coins and tokens. I have no idea which ones will win over the next 5 years, but I don't need them all to win. I just need a few to win, and that's what diversification is all about. And I've made some investments in the infrastructure. You know that old adage in the gold rush, you were better owning and selling picks and shovels and jeans than you were trying to find gold, because that was very hard to do. The infrastructure of crypto are companies like FTX, I'm a shareholder, Circle, I'm a shareholder, WonderFi, I'm a shareholder, Immutable Holdings, I'm a shareholder. I've given money to all of these projects because they make a lot of sense to me and I use them all. And they're centralized, decentralized. There's stable coins in there. There's the FTX platform, which is the first compliant institutional platform I can find that my auditors and my compliance department finally agree to let me use to store value. And those are the kind of things that really matter to me. And I have to disclose, granted the very first crypto exchange license attached to a dealer broker. A compliant platform. It wasn't rogue anymore. They told Canadian citizens you can transfer your cash out of your bank into this centralized wallet and you can trade Ethereum, Bitcoin, and slowly more and more coins were added. Then they announced in Canada the very first Bitcoin ETF. Then they announced the very first ETF that was for Ethereum. They were moving forward with policy that was regulated. And I immediately started investing in that because I saw it coming. I saw the writing on the wall. And I've also made the assumption, this is a personal assumption, that the OSC, the regulator that granted that world order for the first time, a dealer broker, was well in touch with the SEC and other regulators around the world. They talk to each other every day. Maybe Canada was being used as a petri dish or an experiment to try it. And it's been wildly successful. That's when I got involved in WonderFi. I became a shareholder there. WonderFi bought BitBuy, which was the first regulated exchange. And now that company has 800,000 registered compliant crypto accounts. It's the model for the rest of the world. So I got on a plane. I went to the United Arab Emirates, Switzerland, England, South America, and I started showing these different regulators, look what the Canadians are doing. Can we do the same thing here? And that's exactly how I'm spending my time now, trying to open up these new markets with the policies that have been put in place, tested, and proven to work in Canada. And I could put a lot more into that space because I've got a lot of cash on my operating company balance sheets, and I have nowhere to put it. And inflation is 6, 7, 8%, and I'm getting 45 basis points in a bank. That's really crazy. I could do a lot more with stable coins.
So that's funny. So you're saying even compliance is treating USDC, which is a stable coin, which is one-to-one, pretty much one-to-one backed with money in a bank, actual dollars in a bank. You're saying that they're still treating that as a speculative asset. So
that's the challenge. That's the challenge. You can't get your compliance department on board because they say, show me the policy. Well, there is no policy. That's the problem. Is it FDIC insured? We don't have that yet. We've really got to get this stuff nailed down. That's why I keep telling everybody, get behind policy because you're going to get a whole lot more capital into this space. There's 52 billion already in USDC. Tether's out there. That broke a buck, so I can't touch that. And of course, Luna was insanity. Well, we now know algorithmic-based stablecoins, well, they don't work so well, do they? So the market will figure that out, and they'll and they'll basically adjust accordingly based on risk and return. Well, obviously, when new projects come to market, I'm very fortunate. I see pretty well every deal. And there's a reason for that. There's a direct correlation between market capitalization and telling the company's story. Everybody knows I have millions of followers, millions of investors, and I like to talk about the cooking I eat. I mean, I don't invest in projects that I don't use. I don't care whether it's a product or it's a crypto product or whatever. You don't see me in a lot of these very speculative tokens because I don't use them. I'm looking for value there. I'm intrigued by the NFT market in authentication of physical assets around the watch industry. That's a space I'm very involved in. That's a private investment along with other giant collectors and watchmakers and horological societies. But that's just my personal interest. So it's the things that I really want to dig into, that I invest in. But you're right, there's a lot of room for private projects because, I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities, and a third of the engineers all want to go onto the blockchain. You can't take that much intellectual capital and not expect some incredible outcomes 3 to 5 years from now. This isn't going away, and these senators and congressmen and women know this, and that's why they're bringing these and advancing them. All of these senators are all over cable TV today talking about this bill dropping, and it's not the only one. And certainly many of them will be discussing it in the weeks ahead. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to. But I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment. But boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today. But it's education that's holding everybody back. We've got to simplify this stuff. Most people, the first time that try and set up a decentralized wallet on, let's say, MetaMask, lose their money because they don't know about security of the passphrase. And that's an important lesson to learn. And that's why I tell people, start with $200. Don't go crazy. Figure this stuff out slowly. Learn about security. Learn about password protocols. Learn about centralized versus decentralized. Check it out slowly. Baby steps into it. Then you can put up real money.
So what is your advice for someone who wants to get educated? Is it just that you have to start using these applications? I mean, I think a lot of people in the early days of the internet didn't understand the internet until the first time, they typed in a Google search or they received an email or something like that. That's how the internet was propagated. What's your advice for someone who's new to crypto and wants to get started? Is it just start using these protocols? How did you school up on it, Kevin?
It was really out of need. I mean, USDC, for example, and what Circle has done with their corporate accounts. I was very early on that platform, spent a lot of time with management talking about how we could make this work with compliance departments, how we could make it work with audit firms. Because the first thing that happens when you take a new asset class and you call up your auditor or your regulator or your compliance department and say, look, I want to transfer 5% of our cash into USDC. They say, what?